in marginal costing we had started with basics of marginal costing. There also I had left out a few problems in basics of marginal costing. Those problems I can complete after doing one concept. So I was waiting for, in basics of marginal costing, what are the sums pending? I think question number 5 would be pending. Five and 16, I think 5 and 16 are pending. These areas I'll cover it once I'm done with the topic which we are going to start today. So we are going to start with indifference point and shutdown point. The moment I'm done with this, I can get back to those two areas. So let's discuss on what is indifference point and shutdown point, and then we come to those set of problems. Now coming to indifference point, theoretically indifference point refers to the level, this is in page number 219. Indifference point refers to the level at which two alternatives are expected to give same results. So you can have multiple alternatives to achieve the result, and when those two alternatives give the same result at some point, that's called as indifference point. For example, I need to travel to place A. There can be a route 1, there can be route 2. Now that time taken to travel to these two places will depend on the traffic intensity which is there on these days, because route 1 is longer but not that much traffic, route 2 is shorter but it has a high traffic intensity. So in case there is a day where traffic is weak, then you will prefer route 2 because shorter distance and no traffic. In case there is a huge traffic or heavy traffic on that day, then route 1 be preferred because longer route, but still the traffic would be relatively lesser than your route 2. So somewhere route 1 is preferred, some days route 2 is preferred. Maybe when the traffic intensity is moderate, both the routes will give you the same time. So you are indifferent between route 1 and route 2 when the traffic intensity is moderate. So on a day, if you feel the traffic intensity is moderate, route 1 as well as route 2 is going to take you to the destination with the same time. Now taking this forward from a company point of view, production, method A, method B, there are two ways of producing product. Method A says that my variable cost is going to be 10 per unit and fixed cost is going to be 5 lakhs. Method B says variable cost is going to be 15 per unit, but fixed cost is only going to be 2 lakhs. So one method fixed cost is less, another method variable cost is less. Assume I produce 10,000 units. Can you tell me what will be the cost? Method A as well as method B, 10,000 units, fixed plus variable all put together. 10,000 units. 10 per unit and 5 lakhs, 15 per unit and 2 lakhs. 6 lakhs, 3 lakh. This is my preference. 20,000 units. How much? 7 lakhs and again I prefer this. 60,000 units. How much? 11 lakhs. 11 lakhs. Technically called as indifference point because both are giving you the same cost. 80,000 units. 13 lakhs. 15 or 14? Okay, 14 lakhs. Now for some level of production I prefer method B, for some level of production I prefer method A. The level at which both the methods give the same result, in this case same cost, that's called as indifference point. There is some level at which both are going to give you the same results, and that is technically called as indifference point. Below indifference point, you prefer a plan with low fixed cost. Always something which has lower fixed cost is preferred when the volumes are less. So below 60,000 I prefer method B. Above 60,000 I will prefer method A, because as volumes go up, my objective is to reduce variable cost. When volumes are less, my objective is to reduce fixed cost, because I don't have that much volume to absorb the fixed cost. Clear? Any doubts on this? Now the formula for your indifference point is, I think it will be covered here, you can listen to it, and then I'll change in fixed cost. Between the two alternatives, what was the change in fixed cost? 3 lakhs divided by change in variable cost per unit, divided by change in variable cost per unit, which was 5 rupees. So 3 lakh divided by 5, 60,000 units is the indifference point. Now if the denominator is variable cost ratio, then you get the answer in rupees. If you divide by variable cost per unit, you get the answer in units. So you can get your answer in units as well as in rupees. So the base formula is change in fixed cost 5 lakh minus 2 lakh divided by 15 minus 10. 5 lakh minus 2 lakh divided by 15 minus 10. Or your denominator can be 4 possible denominators. One is change in variable cost per unit slash variable cost ratio slash contribution per unit slash profit volume ratio. You can also divide by change in contribution per unit. If you divide by variable cost per unit or contribution per unit, you get the answer in units. If you divide by variable cost ratio or PVR, you get the answer in rupees. Any formula which I have introduced till now, sales to achieve desired profit or profit break even point, margin of safety, everywhere, if the denominator is contribution per unit, you get the answer in units. If the denominator is PVR, you get the answer in rupees. That's what we have been seeing till now. Same logic is going to work for everything. Indifference point, shutdown point, everywhere I'm going to do the same thing. Now this is covered in page 64 of your workbook. Indifference point. In case of two different alternatives, indifference point refers to a level wherein two alternatives would give the same result. Indifference point equal to difference in fixed cost by difference in VC per unit, difference in VCR or difference in PVR. You can just make one more addition, or difference in contribution per unit, that is missing there. Change in contribution per unit or difference in contribution per unit, or difference in contribution per unit. So indifference point basically referred to the level, this is there in page 64. Indifference point basically referred to a level at which two alternatives will give the same results. The same results can be same profit or same cost. It can be measured through same profitability or same cost. Both are as such similar. Clear? So let's start with this question number 1. X is a multiple product manufacturer. One product line consists of motors and the company produces 3 different models. X is currently considering a proposal from a supplier who wants to sell the company blades for motor line. The company currently produces all the blades it requires. In order to meet the customer's needs, X currently produces 3 different blades for each model. Supplier will charge 25 regardless of blade type. For the next year, X has projected the cost of its own blade manufacture as follows. Equipment to produce has no alternative use. Space will remain idle. Factory supervision reflects the salary of a production supervisor who would be dismissed from the firm if blade production ceased. Determine the level of production where X would be indifferent between buying and producing the blades. If future volume were predicted to decrease, would that influence the decision? Assume that the space occupied by blade production could be leased. How could this affect make or buy decision? Okay, now I'll have to calculate indifference point is what they're asking. The indifference point between the two alternatives which they have taught about is one, buying the blade, second, producing the blade. So I'll have to find the indifference point between buying the blade and producing the blade. When should I buy the blade? When should I produce the blade? Working note 1, calculation of indifference point for part 1. Calculation of indifference point for part 1. Indifference point for part 1. Particulars buying blades, producing blades. These are the two alternatives I have: buying blades and producing blades. Particulars, buying blades and producing blades. Now I need these two information: variable cost per unit, total fixed cost. I'll have to somehow try to capture this. When I buy blade, what is the variable cost per unit? When I manufacture blade, what is the variable cost per unit? When I buy, what is the fixed cost? When I manufacture, what is the fixed cost? What is the purchase price of the blade? That's your variable cost per unit for buying blade. Every blade you will have to pay 25 rupees. So 25 rupees is the variable cost per unit. Now look at that manufacturing cost and tell me what is the variable cost. Only the variable part. Look at that statement, look at the additional information also. Cost per unit, I want per unit number. How much? 19.5. Go through it, let me know. Now this additional information which is available now is any additional information related to material, labor, variable overheads. Anything related to material, labor or variable overhead. That is factory supervision. Anything related to material, labor, variable overhead. I'll come to factory supervision in some time. Anything is related to material, labor, variable. If nothing is related to that, all the three are relevant. See, all variable overheads are generally relevant because relevant costing is going to become the crux now onwards. I'll have to keep discussing only relevant costing. So all variable overheads are generally considered to be relevant unless provided otherwise. So 75 plus 65 plus 55 divided by 10,000. 75 plus 65 plus 55 divided by 10,000. How much? 19.5. $75, 65 and 55. Now when it comes to fixed cost, the normal understanding is that when I am buying blade, I am not going to incur any fixed cost because I am going to buy it from an outside person. There is no component of a fixed cost. Now the question has given two fixed costs, factory supervision and other fixed costs. Now please listen. In general, all fixed overheads are irrelevant unless provided otherwise. So if no additional information was given, I would have written 0 and 0. I would have written it as 0 and 0. Additional information can make something relevant, something irrelevant. Now, equipment utilized to produce the blade has no alternative use and no market value. Doesn't matter to me, nowhere related to the data. Space occupied by blade production will remain idle if the company purchases rather than makes the blades. Again, nothing quantified in terms of money. Again, leave it. Factory supervision costs reflect the salary of a production supervisor who would be dismissed. So this is alone a relevant cost because it's an avoidable cost. Now how do I write this is, of this 35 and 65, the 65 will anyway be incurred by the company. It has to be anyway incurred by the company. So either you can write purchasing 65,000, producing 1 lakh. When you purchase blade, you will incur 65. Why 65? The 65,000 will continue to be incurred by the company, and for the other part it is 1 lakh. Or you write it as 0 and 35,000. Both will give me the same answer because I bother about the difference only. Either you write 65 and 1 lakh or 0 and 35,000. Both are going to give me the same answer. If I write 65 and 1 lakh, I am saying that 65,000 will anyway be incurred. Let me write at both the places. If I am writing 0 and 35,000, I am saying 65 is irrelevant. Let me remove it from both the places. Either consider both the places or remove it from both the places. Clear? Any doubts in this? Any doubts in this? So your fixed cost figure is going to be 0 and 35 or 65 and 1 lakh. Anything you write doesn't matter. I am going to get to the same answer. We will write it as 0 and 35,000. When I buy, I don't incur anything. When I produce, only 35,000 is relevant. Balance 65 is of no use. That balance 65 doesn't even make sense. Now you apply the formula, that's all. Change in fixed cost by change in variable cost per unit. 0 and 35,000. That balance 65 is an irrelevant number. Let's not bring that into our analysis itself. What's the indifference point? How much? 63. Any doubts on 6364? 35,000 minus 0 divided by 25 minus 19.5. 35,000 minus 0 divided by 25 minus 19.5. What is the current level of volume which the company is needing? 10,000 blades. So at 10,000 units, will you want to buy blade or make blade? 6364 is the indifference point. Above indifference point, what do you select? Above indifference point, it is low variable cost, below indifference point, low fixed cost. So above indifference point, that is above 6364, I would prefer which one? Producing blades. Any doubts in this? Any doubts in this now, right? For the current volume, the company should choose, to make the blades. For the current volume, the company should choose to make the blades. Full stop. Then they have added something saying that if the future volume were predicted to decrease, would that influence the decision? Full stop. If the future volumes can fall below, 6364 units, then the company should shift to below 6364 units, then the company should shift to which one? Buying blades. Should shift to buying blades. Clear? Any doubts in this? Done? Any doubts in this part? Now let's discuss this part. How do you want me to factor this? Some 45,000 is given. I want you to tell me what of this will change. Something has to be changed. Part 2. Either the 25, 19.50, 35. Which one? Which? So how do you want me to write it? You tell me. Okay, take it. Any other way or anything else? Now, what is this 45,000? First, tell me that. It's an opportunity cost for making the blade. So there are two ways of writing it. I can say I will add a 45,000 of opportunity cost here, or I will write minus 45,000 this side. Why minus 45,000 is this is the gain. Because if I start buying blades, I would have leased out the facility to someone else and would have earned an income of 45,000. So when you buy blade, your variable cost is 25 and fixed cost is minus 45,000. Why minus 45? Because you are going to earn income rather than spending. Either add 45 to the producing blades part or subtract 45 from buying blades, only one. You cannot do both. Either consider it as an opportunity cost or consider it as an income. One of the two approaches. So if I add 45,000, it will become 80,000 minus 0. If I deduct 45,000, it will become 35,000 minus of minus 45, which is indirectly 35 plus 45. So do the same table again. Recreate the table and make it 80,000 in the producing blade side. Make it 80,000 for producing blades. Make it 80,000 for the producing part. How much is the indifference point? How much? 14,005. Anyway, for this we'll directly go with buying the blades itself when it becomes 14,545. Any doubts on indifference point? Any doubts in this? I'll proceed to question number 2 then. Please go through the question. Okay. Now coming to this question, they have given details about a new magazine which a company wants to introduce. You can either go with method A or method B. Both of it has its own cost structure. There's a variable cost which is given. There is a semi-variable component which has been given. Now the semi-variable component I'll have to split into variable and fixed using the formula. Once I am done with the basic cost structure, that is I'll capture 2-3 information, variable cost per unit and total fixed cost of these two methods. Once I am done with this, I'll calculate for each production method net increase in profits when the volume is 5, 4 and 6. This is some extra information which they have asked and some comments. What should I do with this information? Some existing magazine data is given. Correct. So is there a proportionate loss or a complete loss? One for every 10 copies sold. So both the methods, there will have one component called as variable opportunity cost. When there is a proportionate loss, you take it as variable opportunity cost. When there is a complete loss, you take it as fixed opportunity cost. We have done this in the basics of marginal costing. So we'll have to continue with that approach. Variable opportunity cost or fixed opportunity cost. Working note 1. calculation of VC per unit, calculation of VC per unit and TFC. And TFC for both methods, VC per unit and TFC for both methods. VC per unit and TFC for both methods. Particulars in two methods. Particulars, method A, method B. VC per unit and underline. VC per unit and underline. Now write direct variable cost. Direct variable cost, which is specifically given for the product methods. Direct variable cost, how much? 0.55 and 0.55 and 0.50. VC in SVC, variable cost in semi variable cost. VC in SVC, split and tell me what is the VC per unit. VC in SVC, any two levels you can take. Change in cost by change in units. VC in SVC, point, that is 65,000. This is 65,000, not 6,50,000. This is wrong. 65,000 minus 55,000 divided by 450 minus 350. 65,000 minus 55,000 divided by 450 minus 350, which is 0.10. Change in cost by change in units. For the other one it is 0.05. VC in SVC. One is a direct variable cost, second is the variable component in the semi variable cost, third one is variable opportunity cost. Variable opportunity cost. Now please listen. Any doubts till now? We are losing one copy for every 10 copies sold. This existing product is earning a contribution of 50 paise. 85 minus 35, it's earning a contribution of 50 paise, not profit, we go by contribution. That 50 paise, the loss is into 1 by 10. Because for every 10 copies we sell, we lose 1 copy. So your opportunity component is 50 paise into 1 by 10. 50 paise into 1 by 10. VC per unit 0.70 and 0.60. and 0.60. Any doubts on this? Then total fixed cost. Total fixed cost. In the direct fixed cost and FC component, FC in SVC, direct fixed cost and FC in SVC. What are the direct fixed costs given? 80 and 120. 80 and 120. 80,000 and 1,20,000. From the semi variable cost, tell me what is the fixed cost. You can take one level and do the calculation. I'm not explaining that. Let me know in case you need an explanation there. FC component in SVC. FC in SVC. How much is the FC in SVC? 20 and 30. Now this is my basic information. If they ask indifference point, I can get indifference point with this. If they are not asking, let's see whatever the question is asking about. But this is the basic information. To produce a product, we are spending 0.70 and 0.60, and the fixed cost is 1 lakh and 1,50,000. Any doubts on this? Now the requirement of the questions are: calculate for each production method net increase in company's profit which will result from the introduction at some 3 levels: 5 lakh copies, 4 lakh copies and 6 lakh copies. Next working note: calculation of incremental profits for both methods. Calculation of incremental profits for both methods. Particulars and 2 methods. Incremental profit for both methods, particulars and 2 methods. Particulars and 2 methods. Now write what are the levels they have given. 5 lakh copies. What is the selling price of this new magazine? How much? 1. Okay, now please listen. 5 lakhs into 0.30. What is 0.30? Is 1 rupee minus 70 paise of variable cost minus 1 lakh. 5 lakhs into 0.30 minus 1 lakh. This side it is 5 lakhs into 0.4 minus 1,50,000. You will get the profit for both the methods. Then you change the 5 lakh as 4 lakh. Then change it as 6 lakh. 5 lakhs into 0.3 minus 1 lakh. 5 lakh into 0.4 minus 150. What's the profit? Then do the second scenario, do the third scenario. This is incremental profit because we have already considered opportunity cost and all. So once you consider that, this will tell you how much extra profits can a company make. Any doubts on these three numbers? Now, can this calculation tell me what is indifference point? 5 lakh, because it's making same profit for both the methods. The level at which both are going to make the same profit. This will come in our conclusion. So we'll write this in conclusion in some time. But I'm not doing indifference point calculation. It is turning out to be 5 lakhs. What is the second part of the question asking us to calculate? What is this exactly? What is this item? You tell me first. Calculation is not great. Simple thing only. But what are they asking us?
If the number of units increase, then it will go beyond the indifference point.
Okay.
So they are asking at which level will that happen?
No, so if at what level is 5 lakh level, both will make same profits. What is the exact requirement of the question? If you understand the requirement, it's easy. Yeah, technically they have asked for margin of safety. They have said calculate for each production method the amount by which the sales volume could decline before the company makes no additional profit. No additional profit means break-even point. So they are asking us to calculate break-even point. With the help of break-even point, I'll calculate margin of safety. Why margin of safety? They are saying how much can the sales decline from 5 lakh? Break-even point will tell you the level at which you make zero profit, zero loss. So from 5 lakh minus the break-even point is the requirement of the question. 5 lakh minus break-even point is the requirement of the question, technically called as margin of safety. Technically called as margin of safety. Next working note, calculation of acceptable drop in sales volume. Calculation of acceptable drop in sales volume. Calculation of acceptable drop in sales volume. Particulars method A, method B. Particulars method A, method B. Acceptable drop in sales volume. Method A, method B. I'll first calculate BEP, fixed cost, contribution per unit, and BEP. Fixed cost, contribution per unit, and BEP. Everything is available with you. There's nothing to be calculated. Fixed cost, contribution per unit, and BEP. What's the fixed cost figure? 1 lakh and 1,50,000. 0.3, 0.4. Three lakh 33,333 and 3,75,000. Next is acceptable drop in volume. drop in volume with no additional profit. Acceptable drop in volume with no additional profit. From the 5 lakh level they want us to calculate. Technically you can write in bracket MOS. This is nothing but margin of safety. 166, 667, 125. My sales volume can fall by 1,66,000 units and 1,25,000 units. 166, 667 and 125. Okay, now we'll move to the conclusion part. Any doubts till now? Now, conclusions are basically going to come out from an indifference point. Now, please listen. What we are going to write in conclusion is level of activity and method to be selected. 5 lakhs, we are on A or B, we are indifferent. Greater than 5 lakhs, which method is preferable? Method A or method B? Method B, in bracket low variable cost. And another proof for you is, if you look at 6 lakh, method B would be making more profits. At 6 lakh units, method B would be making more profits. 0 to 5 lakhs, method A, low fixed cost. Wait for some time. Method A, low fixed cost. Any doubts in this? Below indifference point, it is low fixed cost. Above indifference point, it is low variable cost. Any doubts in this? There's a mistake in this table. There's a mistake in the table which I have created. Can you spot it? Yeah, your starting will come as, if you look at, we did break even point analysis, no, somewhere that is going to come in 0 to 3,33,333, neither A nor B, and it will start only with 333, 334. I'm not bothered about 375 because already I have broken even with method A. The 375 is of no use. 3,33,333 is the minimum volume I need. If I am not going to get 333, then let me not even introduce the magazine. Minimum I need 3,33,000. Now, how this table helps somebody to make a decision is, I will give this to my MD and he will decide whether we use method A or method B or not to introduce the magazine itself. Because you will have a expectation saying that the number of copies to be sold will be 2 lakh. Then I'll say let's not introduce the magazine itself because it doesn't make any sense. If it's going to be 4 lakhs, we use method A. If it's going to be 5 lakhs, we are indifferent. If it's going to be 7-8 lakhs, we go with method B. So, depending on the volume which is going to happen, you decide which method to be selected, and in that the starting point is going to be till break even. Till break even, neither A nor B. 375 does not come into picture because that break even is of no use, because I've already broken even with method A. Clear? Any doubts on this? Put this table. This is the conclusion. Level of activity and method. Level of activity and method. Any doubts on this? Till 3,33,333, it's going to be neither A nor B. We are not going to select any of the two methods. Clear? Can you proceed? Any doubts on this? Go through the next question, question 3. Okay, now the formula for indifference point is change in fixed cost by change in variable cost per unit or contribution per unit. But that can be used only between two methods. When I have three methods, I'm going to have multiple indifference point. There will be one indifference point between manual and semi-automatic. Second indifference point between semi-automatic and fully automatic. Third indifference point between manual and fully automatic. If you have four methods, then between 1 and 2, 1 and 3, 1 and 4, 2 and 3, 3 and 4. You will keep doing multiple indifference point. So here formula remains the same, just that you are going to get three answers. So let's start. Indifference point equal to change in fixed cost by change in variable cost per unit. Indifference point equal to change in fixed cost by change in variable cost per unit. Change in variable cost per unit. Below that, between M and S. M and S is manual and semi-automatic. Between M and S. First one is between M and S.
So we will not have one indifference point where three methods will have.
No, not possible. Between M and S, change in fixed cost. What is the fixed cost total of semi-automatic? 45,000 minus 15,000. 45 minus 15 divided by 240 minus 140. Even if you do 140 minus 240, doesn't make any sense, doesn't make any difference, because as such I want an answer which is without any sign. Change means just the difference. 240 minus 140, so this is 300 cases. It's being measured in terms of cases, so 300 cases. Then between manual and fully. Manual and semi-automatic is 300 cases. 45 minus 15 divided by 240 minus 140. How much is fully automatic? No, so cost is 125, 15, no? Minus 15, I am done manual and fully. Minus 15 divided by 240 minus 40, 550 cases. Then between S and F, semi and fully. Between semi and fully, $125 minus 45,000 we have got three different answers: 300, 550 and 800. Any doubts on this? Now, before answering the next part, let's create that table which makes it easier for someone to understand level of activity and method to be selected. So, two columns: level of activity and method to be selected. Level of activity and method to be selected. Level of activity and method to be selected. I'll give you the various levels which can come in that some of them are not going to be relevant. Later on you'll understand that. You can write level of activity as 0 to 300, then you can fill the method in some time. 0 to 300, at 300, 0 to 300, you can fill the method in some time. At 300, 300 to 550, at 550, 550 to 800, at 800 and greater than 800, 0 to 300, at 300, 300 to 550, at 550, 550 to 800, at 800, greater than 800. One of them or two of them can get knocked off later on. You try to write the method, which method to be selected for these 7. 0 to 300, at 300, 300 to 550, at 550, 550 to 800, at 800, greater than 800. You will have to get only one of the three methods, okay, not multiple methods, unless it's an indifference point. Below indifference point, low fixed cost; above indifference point, low variable cost. Think about it, write it. You will get some confusion, so I'll resolve that in some time. Zero to 300, which method? Manual. at 300? Manual or semi. 300 to 550? Semi-automatic. At 550? At 550? Manual or? Then why did you say 300 to 550 semi-automatic? Manual. Why then? Why I am differentiating 0 to 300 at 300, 300 to 550? I could have written directly 0 to 550.
Because we have break-even point.
There's no break-even point, no? No, you are saying 0 to 300 manual, at 300 manual, 300 to 550 also manual. Then why don't I combine it? Tell me what you want me to write. 0 to 300 manual is correct. At 300 manual or semi is correct. At 550, 300 to 550 semi-automatic is also correct. At 550 what is there? If you are telling me to write manual, then I have gone wrong earlier. What should I write at 550? Because that is what is going to decide the answer which you are going to give to the part 2. This understanding is critical to answer part 2. At 550, which method will you select? Manual or? No, it's not manual or semi. You do one thing. At 550, calculate the cost for all the 3 alternatives. Quickly do all the 3 alternatives total cost. Variable plus fixed. And then tell me which is the lowest. Below indifference point, low fixed cost. Above indifference point, low variable cost.
But our comparison will be between M and S.
M and?
Yes.
Then what do I do with M and S?
We arrived at between M and S was 550.
300. M and S was 300.
M and S is 300. Between M and S it was 550.
Correct.
So 300 to 550 you look at M or S which has fixed or lower cost.
Why not M and S which has low variable cost?
Because we considered that okay, then you can consider
It has turned out to be semi-automatic. This is an irrelevant indifference point. Till 800 it's going to be only semi-automatic. The moment I extend beyond 300, there is no method called as manual in the question. The moment you go beyond 300, there is no method called as manual. So till 300 manual is better. After that it's either semi-automatic or fully automatic. So that manual and fully automatic 550 which we have calculated is more of a formality. It's not going to help me in making any decision. That's why at 550 what you have got? Semi-automatic. Manual and fully can give you both the same cost. But semi-automatic is better than manual. And it's also better than fully automatic. So it's not 300 to 550, it's 300 to 800. That 550 indifference point which we have calculated is an irrelevant indifference point. It doesn't make any sense because below 300 manual, the moment you go beyond 300, there is no method called as manual. So ignore there is a method called as manual. So then if manual is not there, tell me what is the indifference point between semi and fully. I don't want to know between manual and fully because if you are going to tell me 550, manual does not even exist after 300 units. Manual is a method which does not exist after 300 units. That is where the cost calculation is going to help you. So till 300 manual, perfectly fine. The moment we go beyond 300, I don't have a method called as manual. So 0 to 300 manual, at 300 manual or semi. In your case, if you have written, this will be semi. This will be semi, this is going to be semi or fully, and the last one is going to be fully. Greater than 800 is fully. So in short, you can eliminate that 550 from your analysis itself. That 550 is an information just to confuse us. That 550 is of no use. It's an irrelevant indifference point. It's an irrelevant indifference point. Even you do anything at 700, all the places, this is only going to be better. 550 is basically between manual and fully which is better, but semi-automatic is going to say beyond 300 I am better than manual, so let's ignore it. Below 800 I am better than fully, so ignore fully also. Now based on this table you can answer whatever is asked in the question. At 600 what will you choose? At 850 what are you going to choose? Any doubts on the table? This is for your understanding, whether you present this in exam or not, but this is what is required to understand the scenario. This is what will make sense if I am presenting it to my top management, rather than telling 300, 550, 800, no one is going to understand all of that. You give this table saying that if you expect these volumes, this is what you have to do. So somebody says we are going to do 900, I'll say go ahead and do fully automatic. Somebody says we are going to do 200, go ahead and do manual method. 600, go ahead and do your semi-automatic method. So the table will tell you which method is to be selected. So here it's only 4, 0 to 300, at 300, 300 to 800, at 800, greater than 800. Only 5 things. That at 550 and 550 to 800 was more of a formality which I wrote just to explain you that 550 wala indifference point is an irrelevant indifference point. Clear? Any doubts on this? Now if the present case load is 600 and it's expected to go up to 850, which method is most appropriate? Now right, for the present case load of 600, for the present case load of 600, for the present case load of 600, semi-automatic, for the present case load of 600, semi-automatic is the preferred method. Semi-automatic is the preferred method. Full stop. However, if the volumes are to increase to 850, if the volumes are to increase to 850, then fully automatic would be preferred. Volumes are to increase to 850, then fully automatic would be preferred. Fully automatic would be preferred. Full stop. Hence the company can directly go ahead with implementation of fully automatic method. Can directly go ahead with implementation of fully automatic method. Clear? Any doubts on this? This is as far as indifference point is concerned. Now I'll take you through the next one, which is shutdown point. Any doubts till now on the indifference point? Above 300, manual method does not exist. So any indifference point between manual and fully automatic is irrelevant, because above 300 I don't have a method called as manual, because till 300 only manual method survives. After 300 manual method goes out of business. So 300 is between manual and semi. The moment you go beyond 300, semi is the preferred method. So you get an indifference point between semi and fully. Manual and fully I don't want to know. Clear? Any doubts on this? Next, coming to shutdown point. Now please listen. At times what will happen is, there can be a long recession in the economy. Because of the long recession in the economy, the company may decide that I have to temporarily shut down my operation. So that's technically called a shutdown point. Why temporary shutdown? Because if I continue operating, I will have a 1 crore loss. By shutting it down temporarily, maybe my loss reduces to 60 lakh. It's not shutdown will lead to zero profit. No, it's going to lead to loss only, because there are certain fixed costs which will keep incurring, like rent. Rent you may have to keep incurring. So what shutdown point analysis says is that the level at which it is better to temporarily shut down the operations of a company. So there will be a temporary point at which you can shut down the operations of the company. So that level is called as shutdown point. Now from a formula point of view, shutdown point is equal to fixed cost during operation. When I run my operations, I'm going to incur some 5 lakh rupees. So fixed cost during operation minus fixed cost during, even if you shut your operations, you'll have to incur fixed cost. So that is 2 lakhs. This 5 lakhs minus 2 lakhs is technically called as relevant fixed cost, because that is only avoidable. Balance 2 lakhs, what I'm going to incur in shutdown also is technically an irrelevant fixed cost, because whether you run the company or you shut down the company, you will continue to incur that amount. So 5 lakh is during operation, 2 lakh is during shutdown, plus additional fixed cost to resume operation. I'll shut it down, but when I have to start it back, I'll have to incur some cost. It is okay to shut it down, but if I'm going to resume my operation, I'll have to incur some cost. So what they are saying is, in simple words, fixed cost during operation, that is shutdown analysis. Yes means what you incur, no means what you incur. Difference between yes and no is the relevant cost. Like your relevant costing, difference between, if you shut down, you incur 2,50,000. 2 lakh during shutdown and 50,000 to resume operation. If you continue, incur 5 lakh. 5 lakh minus 2 lakh 50 is the relevant. Denominator is contribution per unit or PVR. If you divide by contribution per unit, you get the answer in units. If you divide by PVR, you get the answer in value. Now, if my shutdown point is 1 lakh unit, I should at least be selling 1 lakh unit. If volume is going to be less than 1 lakh, shut down the operations and start again when you see the demand reviving it. Minimum 1 lakh is required to continue operating the company. At sometimes you feel that it is impossible to recover, then you completely wind up the company. That's all. You wind up the company and come out of the business itself, because if you continue to have the company, you may have to continue to pay some rent, all of that will be there. So a shutdown point is basically a temporary shutdown, not a permanent shutdown. Permanent shutdown is company becoming unviable. That we don't analyze here in marginal costing. In marginal costing, what we analyze is there a need to temporarily shut down the operations of the company, only for a brief period, and then I'll resume the operations. So then again I'll start resuming the operations if the operations become better for the company. Clear? Any doubts in this? So I can shut it down for a temporary period and start it back. So this is the formula: fixed cost during operation minus FC during shutdown plus additional FC to resume operation. All this is in brackets, whole divided by contribution per unit or PVR, covered in the theory part. So let's not worry about the formula. Let's go to the question. Go through question 4. Okay. Now coming to this question, they've asked, what happened? Is there a light there? Just switch it on again then. Green. Green light. Just click it again. Press it again.